While the headlines last month were all about oil shocks, inflation fears, and markets dropping, my portfolio on Trading 2 and 2 quietly did the opposite. It managed to pull in over £1,000 in growth alone in just 1 month, and I don't hold speculative or hyper volatile stocks. So in this video, I'll give you a portfolio update and take you through exactly what I've invested in since that time, and at the end I'll show you every stock I own and how much each has grown by so that you know precisely where the profit is coming from and what was my best performing investment. Let's get started. In the video about a month ago, I showed you how the conflict in Iran and the closing of the Strait of Hormuz had affected my portfolio and brought it down to £14,200, and right now my Trading 2 and 2 is now sitting at £15,700. That's £1,500 in a bit over a month with some simple investments. Let's open it up and see what happened. Now, before we begin, just remember that I'm not a financial advisor and this is not financial advice. I'm just a person on YouTube sharing my own journey and thoughts. Investment values can go down as well as up, and always consult a professional before making financial decisions. I also want to say that I don't make these videos to make myself look good or bad. I just share the ups and the downs as they are so you have more information for your own decisions. Okay, so right now I'm in a rare scenario where every single one of my 16 stocks is in profit, which is different from a month ago when I had a few in loss. This was the situation back then with 4 stocks in loss, and pause if you want a better look. And this is the situation now with all in profit, and you can see these profits range from 2% for QYLP and up to 60% for HSBC. So what changed? What did I invest in, and what were the main drivers of growth in the last month? Well, first of all was my £1 a day, where I invest £1 every single day into this Vanguard All World ETF, or VWRP. So that's around £40 since then. Then I invested £20 into QYLP, HSBC and Lloyds Bank. I bought £21 of JP Morgan and £18 of PepsiCo. Then I invested £40 into Realty Income, Simon Property, EPR Properties, Aviva and London Metric Property. So all of that comes to £320 I've invested in so far since that last video. Now I'm going to get to the portfolio as a whole, but just out of interest, this is how much each of those stocks have roughly grown by from just these amounts invested. So that's a total growth of about £20 from just these small monthly chunks, which gives us a portion of the £1,000, but that's obviously not the full picture. So let's have a look at my portfolio as a whole. Before I show you the full portfolio breakdown, I want to quickly mention InvestEngine, who make it possible for me to keep growing my portfolio in a tax efficient way. You've seen me talk about my SIP before, and I still run it through InvestEngine. The reason is that on top of whatever you invest, HMRC adds a 25% government top-up. So for every £100 you put in, you're starting with £125 before the market has even moved. That's genuinely hard to beat. And if you're new to InvestEngine, they also have a stocks ISA where you can invest in ETFs like the ones I hold, commission free. So for viewers of this video, if you use the link below and deposit £100 or more, you'll get a cash bonus of between £20 and £200 deposited into your account. So there's really no reason not to at least take a look. The link is down below. This right here is every stock that I own on Trading 2 and 2, and these amounts are the values they held a bit over a month ago in that video. And now this new column on the right here are the values that these same investments hold right now. But those numbers are not quite right, because to get to the right growth figures, there are a few things we need to first take into account. First of all, I need to take out any deposits from new investments, because deposits aren't growth. So I'm going to deduct those amounts I mentioned earlier from what I invested, while still keeping the growth from those investments I made. So I'm going to minus £20 from HSBC and £40 from Simon Property, etc. And that gives us the final table here. So in total, including the growth from my investments I mentioned, that brings the total portfolio growth to around £1,114.42. I mean, that's roughly what a lot of people pay in rent for a month, just sitting there growing while I did nothing. I also received about £100 in dividends from them that adds to the total return, but we'll leave that out for now. By the way, if you like this kind of information and a personal look at my portfolio, please remember to like the video. I really appreciate it. So let's talk about the biggest growers here, and I'll briefly tell you about why each one did well or didn't. Now, the bottom performers are Aviva, Pepsi, and Realty Income. For Pepsi, the stock has grown 13% in the last year, but had slower growth recently as more money goes into offensive stocks during volatility, rather than this, which is a defensive stock. Both Aviva and Realty Income were affected by oil prices going higher purely because it lowers expectations that interest rates will go down, and higher oil prices often makes inflation go up, and interest rates affect these businesses a lot. So then our top growers were EPR Properties. My market index is the S&P 500 and the All World ETFs, and HSBC. Now, EPR overcame the interest rate blues by beating their earnings expectations by 12%, higher than expected, and they also raised their dividend by 5.1%, well above inflation, and have even been growing and acquiring large new properties. Then the S&P 500 and the All World ETFs grew by a massive 13% or 19% for my £1 a day fund. Crazy for index funds. And the reason was essentially timing. We started with a new war and conflict in Iran, which hit the markets hard, and recently, while there is still conflict, the markets have calmed down, and the meeting this month of the USA and China has been quite positive and has been good news for the Asian and American markets. So some good news and good timing. And lastly, while we talk about Asia, we talk about HSBC because with their large exposure to the region, they've managed to beat their estimates by showing an annualized return of 18% on tangible equity, the highest in nearly 2 decades, driven by its wealth business and Hong Kong operations. And the recent US-China summit really helped to boost further optimism as well. And those assets grew by over £600 just by themselves, with the remainder bringing it to the £1,100 total growth in a bit over a month. So what does that mean for you as an investor? Well, my last video update was about how the markets had fallen and my portfolio was down. This video is about how much my portfolio has grown since it was down. So just from my own perspective, I don't try to time the markets. I just tend to buy a bit extra to my dollar cost averaging when the markets are down, but I keep investing no matter what, and I hold the investments for the long term, and in theory, I don't plan to sell them ever, maybe just receive the dividends or draw down when needed. I think patience and a level head along with consistency are the most important things when investing. So my plan now is to keep investing through what looks like another uncertain few months ahead. So if you want to see how this portfolio looks in another month or two, the good, the bad, and whatever the market throws at us, subscribe and I'll keep showing you everything. And I'll see you next Wednesday, as always, on Casual Cash. Cheers.